Good afternoon, everyone. It's T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So we talked about this morning how this had all the makings of what could be another frustrating Friday. And as I walked around the office today, it was pretty much a ghost town. A lot of traders, a lot of frustration built up over the course of this week. So I think a lot of people chose today, with the end of the quarter approaching, after a difficult period in a market that's very non-committal, not a lot of follow-through in either direction. A lot of traders decided to take it easy, and I think they probably made the right decision based on more of the same type of action that we saw today. But you can take a look at the chart of the spiders as we talk through it. The morning we were strong. Yesterday it looked like we might want to break down out of this lower range in the spiders, but the market was a little bit resilient as there were a lot of oversold stocks that bounced. And then today it was off to the races, back above the 8-day. And it looked like we might get a little bit of window dressing type action into the end of the quarter, which ends beginning of next week on Tuesday. But we faded off the highs. Maybe there's some whispers of people not wanting to be long into the weekend. When there's geopolitical risks like we still have with troop buildups and stuff in eastern Ukraine, some people are attributing the afternoon weakness to people not wanting to be long amid that news. But who knows? Overall, just a very choppy market right now. Very stock-specific action. A lot of divergences between sectors and even within sectors, which it's a difficult environment where you're not getting followed through in terms of trading, but if you narrow your focus a little bit, we have been able to identify some really nice setups on off the charts on our newsletter. So I'm going to go through and highlight some of the stronger and weaker areas in the market today, and then at the end I'll go through some setups that actually look decent to me that I think, talking about that narrow focus, ones that could be the ones that you focus on rather than focusing on trying to trade the spiders or trying to trade indices and instead focusing on individual stocks. But the banks continue to be a little bit of a concern. As I talked about this morning, the banks have been very pivotal in any macro market move. So when the market's been able to break out, it's been when the banks have decided to participate in the rally. And when the market is lethargic and choppy and sometimes breaks down, it's when the banks often lead lower and act really weakly. And right now, you're seeing a mixed bag, first of all, within the banks, but overall the group is not looking great. And even a name like Bank of America, which has been leading the group, hasn't been looking great. But you take a look at the XLF. The XLF, the damage itself wasn't bad today, but if you look at the context of some of the charts within this group, like a Goldman Sachs, for example, huge tail today. Looked like it wanted to bounce, but got smacked back down to finish around the flat line. Didn't show extreme relative strength today, but the longer it bases below that 200-day moving average, the less healthy the market's going to look, and you really didn't want to see it close all the way back down after a decent start to the morning. So not an encouraging sign for Goldman Sachs. The Citigroup, obviously, its well-publicized problems. It failed the stress tests. The Fed rejected its capital plan. It looked like it wanted to try to bounce yesterday, but sort of like Goldman looked today, came back down to form a little bit of a doji. And then today gapped up, but wasn't able to hold on to any of those gains and faded. And then you look at a name like Bank of America, like I talked about. This one's bleeding lower even, back below its 8 and 21-day moving average. So even the leaders in the group not acting that great. JP Morgan pulled back a little bit as well over the past few days. The one that's holding up best, if you're looking to play a relative strength play within the group, is Wells Fargo. Still well above its 8-day, finished with small gains today. But the banks will continue to be a sector that people will watch as a potential harbinger for the next macro move in the market, or next intermediate term move in the market, I guess you could say. And tech continues to be a very interesting case as the Qs continue to show relative weakness. Today they were able to finish with slight gains, but as I talked about in some of these the stocks among the banks, the tails that we saw today were not very encouraging. And when you combine that with the fact that some of these stocks weren't able to even bounce very well yesterday from oversold levels, overall it doesn't give you a very bullish view of tech right now. And especially some of the names that have been go-to names recently. You talk about Google has obviously been a rock, extremely strong in the market, leading the market, but you haven't seen 5 to 6 week days, or even more than that, down days like this in Google, and I don't know how long. It had this sharp sell-off here in late January, but immediately snapped back above its 8 and 21-day moving average. But here you're seeing a more calculated sell-off and more sustained sell-off, and one that even looks like it might want to test this lower pivot here. That's around 1082, and then the 200-day would come into play. So definitely not encouraging to see that type of candlestick today on Google and just the overall action we've seen on Google. And then other names that continue to weaken. Netflix has obviously gotten a barrage of negative news. First it was the Apple potential streaming service that they've been discussing with Comcast, and then it was Amazon today coming out with a free streaming service that includes ads. So there's competition coming from all directions right now for Netflix that are just weighing on the stock. It's one that with another momentum down push, maybe you could get some sort of capitulation. It's highly oversold right now. We isolated this rounding top pattern on off the charts, and it met our target. And right now I think most people are trying to look for some sort of bounce, but potentially you might not get it until you get the full gap fill down here, which would come at 334, 335 area, so something to keep an eye on there. Apple looked like it might want to trade inverse to the market and act a little bit better, but then on Wednesday had a big engulfing bar, and then it's bled lower the last 2 days. And then a name like Baidu, someone was pointing that out in the virtual trading floor. Another tail, looked like it wanted to try to bounce, but just continues to bleed lower. Not an encouraging sign at all. But maybe you'll get some sort of window dressing beginning of next week, but people thought that could come today as well, and you didn't get any of that. Biotech. Well, first I'm going to talk about two lower quality tech names. Since they're in tech, I'll cover them while I'm covering tech. BlackBerry and Zynga were two names I talked about this morning that are laggard type names that traders were going to be watching. They were mentioned in Scott's morning note. BlackBerry had reported earnings that were not quite as bad as expected. They didn't lose as much money as expected, and the stock was strong in the morning. Looked like it might want to squeeze, break above this intermediate pivot here around 971. Maybe people were thinking it could get up into the double digits again. Instead, you got a huge engulfing wide range bar where it was weak or strong in the morning and then closed really, really weak. If you look at a 5-minute chart, you can see that really weak close on BlackBerry. This is a 24-hour chart, so you're seeing some after-hour stuff. But these were the last two candlesticks into the close. So people, maybe institutions, big players, whatever, decided to dump this thing into the weekend. Just didn't want to hold on to this stock anymore after a quarter that wasn't quite as bad as some analysts expected, but still definitely not anything that gives you an indication that BlackBerry's about to rescue itself and get back on track. So just something to take note of there, and this one definitely off the radar now for any longs, in my opinion. Zynga, another one that last night SAC Capital disclosed that they had increased their stake in Zynga. As you can see, it's been in a really sharp downtrend. Some people thought with a big short interest, maybe that could trigger some sort of short squeeze, but instead you got a bearish engulfing bar on Zynga as well. It closed barely back above yesterday's low, but definitely not an encouraging technical sign there. The 200-day and the opening of this gap will be the big levels that people will be watching on Zynga. But overall, these mobile gaming stocks just not acting very well. Like I talked about in the morning call, the King IPO that happened this week was an absolute disaster, and I think rightfully so. The company's a one-hit wonder. They have Candy Crush, which has been very successful, but it's hard to forecast in that industry sustaining that sort of success. And investors have been selling that one heavily, and maybe it's just an indictment overall of the mobile gaming industry about how hard it is to sustain success and build multiple popular games that allow you to have the sort of steady revenue that investors want and that can hold a valuation. Biotech, talk about concerning areas. Biotech, some people have talked bubble in biotech, and it had an incredible run, but you're really seeing things come apart in that sector. I'm not going to call it a bubble, but maybe things got a little bit ahead of themselves. If we take a look at IBB, extreme relative weakness today. Markets were still able to hold higher despite the weak afternoon, whereas the IBB was pretty much weak all day. Closed down near yesterday's low. Put in a little bit of a red dog reversal yesterday, but wasn't very convincing, I guess you could say, as it closed a little bit off its highs as well. And today went lower again. Looks like it wants to test this 200-day, which sort of lines up with this previous support level that comes in around 215 or so. So it is a little bit oversold right now. I wouldn't be surprised to see some sort of reflex bounce in the IBB, but overall definitely looks like it's destined for lower prices in my opinion. And you should look at some of the damage across the board there. Gilead was one of the stronger names in the group, really weakening, now down at its 200-day. Celgene weakening below its 200-day. Looks like it has some sort of bear flag type pattern forming that if it breaks below this pivot low could get some more momentum to the downside. That pivot low is 139.01. Regeneron, another one. Big wide range down bar today, threatening another pivot, sort of like you saw in Celgene, like I just mentioned. And then even BIIB has been one of the stronger ones in the group, but it's also bleeding lower. It looked like it wanted to show relative strength early, but instead reversed the downside and broke yesterday's low. This one also looks like it's destined for lower prices. And then Alexion looks like one that's a little bit more calculated that you potentially might be able to still get a trade set up in. Big 2-day breakdown here. Since then, it's been digesting to work off a little bit of that oversold condition, and a bear flag is formed if it breaks below these pivot lows that are here around 146.10, 146 area. It could get some downside momentum, so that's definitely one to keep an eye on. It also could fill the rest of this gap, so there's a couple things on that trade idea that maybe tell you that Alexion could be a good short next week. What was strong today? Sectors that helped the market hold up were energy, oil, and natural gas type stocks. You look at the XLE ETF, really strong. The biggest three holdings on this one are ExxonMobil, Chevron, and Schlumberger. And I'll look at the OIH in a second. Schlumberger is also the largest component in the OIH, so I'll definitely take a look at SLB. But as you can see, XLE, if you're talking about trade setups, on off the charts, we don't focus as much on ETFs, but perhaps this could have been one that we looked at. Really nice move, put in a small little king and queen type formation on Wednesday and then yesterday. Yesterday it erased all those losses from Wednesday, and that type of formation tells you that this wants to go higher, especially given the fact that it's above its 200-day, still above its 21-day and 8-day. And really nice move today to stand out. Oftentimes, momentum type traders don't focus so much on energy names and stuff like that, but you got to look to where the money rotates and have scans and alerts that go off to tell you where money's rotating that day. And the OIH, like I said, another strong sector. I'll look at SLB. It is a top 3 component in both those ETFs. Really nice trend over the last 2 or so weeks in SLB to get back above its 8 and 21 day, still well above its 200-day. Let's look at a weekly chart on this one. SLB, as you can see, on the week breaking above this weekly pivot back from October 2013, so really healthy action there. Just extended higher today and is a little bit overbought right now. I definitely wouldn't say that it's a calculated buy here, but just something to take note of. Maybe a retest, be a potential buy. As I talked about, I'll go to daily on Chevron. Chevron is one of those names in the XLE that helped lead it higher. XOM. XOM, really nice day today, sort of a lower level pattern, but broke above a pivot here, and there's not much in the form of resistance until you got up here around the $100 area, so some room potentially for XOM to bounce as well. And then the XLU, the utilities and bonds got hit a little bit today, but utilities held up well, finished positive, still above their 8 and 21-day moving average. People have thought rates were going to increase and utilities were going to sell off, but you've seen the exact opposite. You've seen bonds be really strong. Bonds did sell off a little bit today, but closed off their lows and are still above their 8-day moving average after breaking out earlier this week. We'll see if that dynamic continues. And gold. The gold miners actually led the charge today. You look at the gold miners, you might think, oh, gold had a pretty good bounce. But what we've seen over the course of the last several months is that the gold miners oftentimes have been leading indicators for gold. I think that's a little bit of a lazy type of generalization to make, but we have seen that trend, so it's something to pay attention to at the very least next week to see if you get some sort of calculated buy setup in GLD. It did find its footing a little bit today, at least has some green in the body as opposed to the last 7 or 8 sessions. Hasn't even had a green body. It's sold off during every session, so at the very least an encouraging sign there for GLD. Maybe if it can break above today's high, can get back above yesterday's high, maybe that can give you an entry out of this really steep descending channel type pattern. Just a few names that I want to point out, some quick hitters that most of which have been on off the charts, some of which haven't, but I'll give you a freebie on this Friday afternoon, some of the names in that premium newsletter. FANG is one that we highlighted on Wednesday. FANG, not a name that's often on the tip of momentum traders' tongues, but we saw a nice upper level setup and we got really nice momentum on the breakout yesterday after listing on Wednesday night's newsletter, and then it tacked on more gains today, showing really nice relative strength. So there's some room to that target. I can't remember the exact target, but I think it's probably up here in the $75 area. Really nice move there. Consumer stocks have actually been holding up relatively well. You see Macy's has a really nice upper level pattern that hasn't triggered yet, still above its 21-day moving average. It continues to be very tight. The longer, after an igniting move, the longer a stock builds that base, the more energy, sort of potential energy that it builds. So continue to watch Macy's to see if you get any sort of breakout there. Microsoft, not on off the charts, but these old school tech names continue to be the best among tech. they sort of fit more into that value type group. You talk about utilities and those type of stocks acting well. In an environment where rates are not rising, they're actually falling, you get these dividend type stocks actually perform better, in addition to some of the stuff like Microsoft Windows being added to iPad and stuff like that. This was the most resilient. It did have a 3-day pullback after a really strong move, but today responded really nicely and didn't pull off as much as some stocks did in the afternoon sell-off. So nice action there in Microsoft. GLW, if you're part of the room, you know this is one of my favorites. Continues to hold up really nicely. Maybe it'll form another upper level bull flag to provide another potential entry, but definitely more of a value, slower mover type name. But with that said, even these slow mover type names have given you really nice percentage moves. So you've gotten price appreciation in addition to, if you're a long-term holder, some nice dividends. Halliburton's one of those ones in the oil group that acted well. It's been on off the charts above its 8-day moving average. BHI, another one. Really impressive move, is on off the charts, is on the watch list. Really nice action there. And then SodaStream was Mark Sperling's trade idea of the week this Monday, and didn't break out this week, but I think it's one you got to be a little bit patient with. It is a laggard name, but you talk about a stock that has a 46% short interest. If it can break above any sort of pivot, it's going to get at least some of those shorts, the weaker of those shorts, non-institutional shorts maybe, or institutions that are a little bit too short and don't want to be exposed to a potential squeeze. They're going to run for the exits if this gets any momentum and sustains any momentum. I know it's been very frustrating this week for traders who are looking for that move, but you can't get discouraged when a stock doesn't always reward you with instant gratification. You got to keep it on the radar. If it breaks down and trigger stops, then so be it. But I think it's one you have to keep on your radar and have alerts set for. And if it can get into this gap and break above some of these lower pivots here, I think SodaStream could really be in for a big squeeze like we've seen in a lot of other stocks over the last several months. But that'll about do it for today's recap. Definitely a very long, frustrating week. I don't day trade myself, so I haven't been feeling a lot of the frustration that some of the more short-term traders have been this week. But I can tell you from being around those types of traders that I haven't seen that level of frustration in quite a long time. The market's been trending higher for most of the last several years, providing a really good environment for trading. But this year so far in 2014, we haven't got at an environment that's as conducive to short-term trading. But instead, you have to narrow your focus a little bit. Either narrow your time frame to a very short-term time frame where you're taking trades on a 1 to 1.5 to 2 day basis, or you widen your time frame and you ignore all this noise that's happening. That's more the approach that I prefer. Stocks ignore all the intraday and the short-term gyrations that you see and focus on the stocks that the more macro charts are holding up really nicely. And I think there are those setups out there. There are those stocks out there. But we just got to continue to monitor trends. When you get to the beginning of a new quarter, which we're going to get on Wednesday next week, sometimes some of the window dressing and other factors that come into play at the end of a quarter, those sort of expire and the market has, I guess, what you could call a blank slate. So we'll see if things like bonds remain strong and see if tech remains weak and biotech remains weak. And if they remain weak at the beginning of next quarter, when hopefully bulls would like to see new money inflows into funds and things like that, that could be a big-time telltale sign. But next week will be very interesting. I'm sure traders will be chomping at the bit to get back in on Monday and have a little bit of a restart after a tough week. But thanks for joining me here for the daily recap, and we'll see you back here on Monday for the morning call. I'll be on with you a lot next week as Scott is going to be out of town. So maybe we'll try to get some other people in here with me, some different voices from T3 Live. But should be a fun week as I'll be in here with Brittany more often than not.